Let's go straight across to our guests and find out what they're expecting as we head into the crucial 1 hour. Madhu Kela, Chief Investment Strategist at Reliance Capital, joins in. And to handle all the tax issues, Ashok Vadwa, the Group CEO of Ambit Holdings, is also with us. Gentlemen, morning to both of you. Madhu, let me start off with you first. On this long-term capital gains tax issue, there is an expectation that the tenure would get extended, and there's also an expectation that there would be a reintroduction of a tax of, say, around 10% or so. Which would shock the street more?
I think any meaningful change, whether it is a tenure or putting up the tax, you have to see, Sonia, the markets are already nervous. Foreigners have been selling relentlessly. Domestic people who have put money over the last 1 year have not made money. So market is already nervous. And at this point of time, you introduce one more bad news. It is not going to help the cause of the market. I'm afraid that market, if there is anything of that sort, market will take it negatively.
Ashok, morning. What is the case for the long-term capital gains tax? Because a lot of people believe that why would the government want to do something like that at a time when sentiment is already quite brittle? But you think that there is a case for the long-term capital gains tax this time around?
Well, I think the case is built around what the government wishes to give by way of a broad message. If the message is that I'm not a suit-boot ki government and I really am pro-poor, then, I think there are enough hints given by senior leaders of this government to say that capital gains should not be given the relaxed treatment that it has been given thus far. If you go back and see, they have extended the long-term capital gains from 1 to 3 years on unlisted stocks.
That's correct.
And some other, debt instruments last year. One would argue that if they carry forward the same thought process, it should apply to listed stock. Now, the one case not to do it, apart from the point Madhu made, is that long-term listed stock has STT. You pay STT on it, and therefore there is already a one level of tax that you're collecting, which has been very successful. Why change what has been successful otherwise? But if this is a Thomas Piketty budget, as many people believe it is, then some of the points that you made, i.e. tax the rich, long-term capital gains and dividend distribution tax being the easiest and the most visible items, are probably likely to be impacted.
Okay. Ashok, morning. On this dividend distribution tax issue, is there a possibility of the tax being moved to the hands of the investors completely? Or as Sudhir Kapadia, our previous speaker, was pointing out, there could be a tax of, say, 10% or more to investors who perhaps earn more than, say, 1 crore dividend. Do you think that case could be built as well?
My own view is that if there was one tax which demonstrates lack of equality between the haves and the have-nots, it's probably the dividend distribution tax. Now, it was levied for good reason, because the complexity of trying to collect it among so many taxpayers was that much more difficult. By levying dividend distribution tax, government made it at source, in a sense, an easy collection. So let's not forget the administrative cost in a regime which is trying to increase the tax base. To try and shift anything from source to the taxpayer is a more complicated and cumbersome process. But if you think about it, somebody who's got an average tax rate of 10% and somebody who's got an average rate of 35% is paying 20%, which means the poor, in one sense, are subsidizing the rich on the dividend distribution tax. If you were to look at it, as I said, from a Thomas Piketty angle, having said that, should the government do it ignoring the fact that it facilitates and the administration cost of dividend distribution tax is so much easier? Should not do it. And as again Madhu said, let's not disturb the apple cart that has worked well.
How's the market position, Madhu, going into this budget? Because, there's been a bit of a scare going around on this long-term capital gains. Markets lost 2-3 percentage points over the last week or so. If that long-term capital gains does not come and you have an average budget, do you think there's a case for a rally today?
I would bet on that, Udyan. I think I have not seen market as nervous as they are in a long time, Udyan. I think, we are forget these 2-4 days. Markets have not given any return in last whole of 1 year. We are down 20% from the peak. And there is such nervousness in people. This will happen, that will happen. And I think the positions are very light. I would think there is significant short positions in the market, both specifically by the foreign investors. So if something like this doesn't happen, and let's also not forget that, foreigners have been selling since August, and there is a visible improvement in the global sentiment in the last 2-3 weeks, barring China. US markets have done well, European markets have done well, broader emerging markets like Brazil, Russia, they are bouncing back from their lows. Oil prices have stabilized and they have gone up. So global sentiment today is in favor. I would not be, so the most important thing is, does this budget provide growth stimulus for the foreigners to start buying back the India story? That is the most crucial point. And if they do not do anything in the long-term capital gains and they start the apple cart, and they deliver what they have promised through the last budget by way of fiscal consolidation and do enough to kickstart the growth, then I would bet that markets could see some kind of a rally from here.
In fact, I want to come to you on that point about growth, Madhu, because we do know that the government doesn't have too much fiscal space. But before that, Udayan, what do you think the extent of the pullback could be, or the relief rally, if there is no negative surprise in the market? Could it restrict itself to 7,100, 7,200?
As I said, it'll probably get back what it has lost going into the budget, a couple of 100 points, maybe get back to 7,250, 7,300. That would be my base case scenario. But if global markets are supportive though over the next few days, you could extend that rally a little bit. But I don't think the budget in itself will lead to a massive rally in the market. As we spoke last time, I think rallies probably will be capped at 75, 7,600. It will need something special for the market to go above that at this point in time. But a rally at least to 7,250, 7,300 is very much par for the course. I'll just add one thing, Sonia, because I think it might be, and this is a conspiracy theory on my part, is that the government might have actually played an important card by sending out feelers on this long-term capital gains, because it knew as soon as it mentioned that all attention from a market perspective will converge on that, and if that did not come through on the budget day, even if it was a pedestrian budget, the markets would actually go up. So I think the people in the finance ministry are very smart. So I think these carefully planned leaks over the last few days, it might be a campaign or an intent to just get the market completely obsessing about one thing and then just not provide that, and that's good enough to spark a rally.
So if you look beneath the surface, it could actually be
possible.
Just
it's a conspiracy theory, as I said, but it's a plausible theory. It can work like that.
Any more conspiracy
no
theories?
More, just this one.
Okay, Madhu, comment on that point you were making about growth, because at the end of the day, that's what matters, right? And we know that the government does not really have any fiscal space this time around to increase the planned expenditure. In FY16, the expenditure budgeted was about 1.3 lakh crores for roads, railways. This time around, what are you expecting, and what would make you happy?
So I think I don't agree with that, Sonia. I think we have done our numbers. So the government has done a commendable job last year of restraining the revenue expenditure growth, which has been lowest since I have been observing budget in many years. So expenditure growth is merely 1%, and they have actually curtailed a lot of wasteful expenditure. So one basic hope is that that trend continues. Second, because we had a big bounty coming out of excise duty last year, and that trend continues in the current financial year, we believe that there is ample scope of even going up to 20% rise in overall capital expenditure and still sticking to 3.6% fiscal deficit. This also takes into account the entire impact of pay commission hike. So we have done our numbers, so there is enough. And also, apart from the budget, there are so many other things which they're trying to do to stimulate growth, which is off the budget item. So I think the whole question is, as Udayan was saying, and he beautifully put it, that the entire attention of the market today is on the long-term capital gains. No one else is talking anything else. But away from that, if they don't do it, and if they do a decent job of sticking to fiscal consolidation, and I think they have ample room to do and stimulate growth, even while remaining into the overall fiscal legroom of 3.6%, that actually will be considered positive. And as far as we are concerned, there are many areas in the government can actually stimulate growth. One of them could be housing, because it touches so many industries, and actually you don't need to do much. You don't need to give a lot of tax swap. Even if you increase the limit of 2 lakh to 4 lakh rupees, there could be a lot of things which could happen on the affordable housing front. So I would say that, and lastly, if I observe, this is the last time they can do something to actually stimulate growth. If they miss this also, then 2019 is not far.
Yeah. Ashok, the other major point in this budget is what the government says on this whole banking stress, because that has broken the markets back. Do you think the finance minister will just leave it at a recap number, or are you expecting that this sector gets a big boost from this budget?
No, they're assuming for a minute that the finance minister is able to come up with a credible maths on 3.5. We keep focusing on 3.5. I think what's important is that the maths behind the 3.5 is credible. Sure. You know what the $1.3 trillion additional expenditure is going to do. You also know that your GDP growth on a nominal basis cannot be assumed to be more than 10%. Now, within that, what other room do you have? Now, finance minister has said that he's going to attribute $10 billion over a 3-year period or a 4-year period from budgetary availability towards the banking sector. You do a 9% credit growth, which I think is the most conservative credit growth over this period, you will see that there is a delta of about $20 billion. Banks need $30 billion versus the $10 billion that the finance minister has provided in his budget. Where is the banks going to get those $20 billion from? You can, of course, sell assets, you can sell ITC, you can sell L&T. But I would argue that if the finance minister was to say that I will stick to 3.5, but I will create another 0.5 of deficit, which is $10 billion, to refinance the banking sector, I think the street will laudle. Because the street will believe, because the street is looking at not just the 3.5 number, the street is also very seriously looking at where is the additional funding for the banking system coming from. And I think that's a very important question that needs to be addressed in this budget.
All right, well, let's just take one look at the market. It's still down about 0.2%. A couple of stocks deserve mention. You have names like GAIL that are down almost about 4%. Auto stocks like Hero MotoCorp are under pressure. Let's get a couple of chartists on board as well in just a bit. Before that, oil marketing companies like BPCL too are down about 2 to 3% or so. But Madhu, quickly come in on that point about bank recapitalization. The story we're picking up is that it could be about 35,000 crores announced this time. The previous speaker from UBS said that will not impress the markets. What's your view?
I think, Sonia, there are various numbers floating. Going by my experience, government need not do everything at one go. So this $20 billion which Mr. Wadhwa is talking about is not required to be done in this year. That is required over the next 3 years. And I would say even their government has a lot of options, including roping in agencies like EPFO to do tier 2 capital if required. They can do some kind of a tax-free bond, preference shares in the retail public. So what I would say that if they have a credible roadmap and explain why the capitalization is, how the capitalization will be done over the next 3 years, then the current year number, whatever they do, even if they do 35,000 crores, it will not be taken very negatively. And secondly, we all know that whatever happens, the government is not going to give in on public sector banks. So whatever capital which will be required even through the course of year, whatever they provide this time, plus whatever is required will be done. So that is known for sure. So I would say that that number is very important. But to my mind, $30 billion is not very important.
Okay, that's Madhu at his optimistic best. But we have Ashwini.